Trader.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome to Fed Day. Fed Day, Fed Day. Tastes great. Fed Day, Fed Day. FOMC. So, man, that's all we've been talking about for the past month or so. It's just when are we going to get through that eclipse cycle and then on to the Fed? And I don't know what to talk about after today's done. Actually, Gilts, did you have fun in class yesterday? We had a really, really cool class on using options information in the marketplace. We had a fun chat about volatility index and how we can use the options on the volatility index to get an idea where the 1% wants to push us around. And also we had a couple of really cool ideas, JetBlue and PayPal and stuff. So yeah, it was a really fun afternoon with you guys yesterday. It is, as I said, Fed Day. So, the problem, I suppose, is I probably look relatively young, but, I'm over the hill now. And talking for like 6-8 hours straight is probably not really good for my health. But Tuesdays are turning out to be like a marathon day for me. So as a result, I was absolutely burnt out, and I sort of subconsciously said, "Well, it's a Fed day today, so if I'm not feeling so good, I'm just going to take the day off from day trading." So I gave myself permission to sleep in today. I hate when I wake up with a headache. So I went back to bed, and thankfully, headache went away when I got a few hours extra sleep. But unfortunately, and it kind of pissed me off, it was actually a really good opening range trade today. Of course, Murphy's Law, that's always what happens. So actually a really good example. I have said this repeatedly. I'm a fan of Johnny Hoagland. And actually, Chris was showing me. I mean, this is how real Mr. Hoagland is. This is why I really liked working with these guys. Whereas a lot of prop traders, especially certain types of prop traders, they can be real assholes. But there's John Hoagland. When Chris showed me that, I was like, "That's fucking awesome." So I mean, this is why I like working with these guys. They're really down to earth. Eddie's put on a couple pounds. Jeez, Eddie, we gotta maybe you and I ought to go on a diet together. Anyway, that if it's one thing I really like about Top Step and I really like about John and Eddie and stuff is they're down to earth, they're real people. And if you are considering going the prop firm route, I would definitely recommend you take a serious look at Top Step. So. But anyway, the point of the matter here is you're not going to get funded with him if you don't take the damn trades. But my trading partner here at TRI, who I think very highly of, he'll do very well down the road if he just keeps his nose clean and his head on straight. We had he and I are doing the opening range trade. And of course, like I said, excuses. I missed the opening range trade, but it was actually a nice clean trade. Would have taken, I think, 56 ticks from the market and then got stopped out on runners at scratch. It was actually interesting to see how the market really dumped right into that opening event and then just took off like a rocket out of there. So there's a really good example of why we like doing that opening range trade. Very simple, very clean. And the interesting thing about this is you can see the first minute, this is a 30-second chart. The first minute of trading actually finished here. So you had plenty of time to put your buy on stop, sell on stop orders working. But as I said, the trades that you give yourself permission to leave alone and let pass, they always work, don't they? So frustrating. But anyway, it is what it is. It's a trader's life. If anything, I was mentioning this before. I had noticed that when I started to get up and running again and really trading in earnest, wow, lots and lots of demons, lots of errors. One thing I've noticed over the past week or two, since of course I have committed to trying to be a demonstrator of best practice to you guys, really cutting out a lot of the errors. So that's good. And if I was going to teach anybody how to sort of be a day trader, what is the process? What's your life look like? Well, I hate to say it's going to look a hell of a lot like this. So this was October, and now we're into November, so I should probably do a new sheet up here. But you just got to show up every single day. Didn't because I gave myself the day off because of FOMC here today. Didn't really go through my entire routine. I did check out the crude and the gold. Maybe I'll do the ES with you guys. But what's the econs heading into the Fed? What's fascinating is we've got a situation here where the housing market is just uber strong. I thought a really good anecdote last night in our secret options formula club meeting. I meet with actually a guy who won our very first contest for our level 1 education program, David O. He and and he's kind of like our quarterback of the secret options formula charting weekly. He and I went through a lot of studies last night together. It was just he and I, and we, shooting the shit and stuff. But here's a really interesting chart that we were kicking around. This is the M2 money supply and the Case-Shiller home price index for U.S. housing. And I have to say, there's a bit of an interesting disconnect. So you can see the M2 money supply. The Fed's trying to contract the market, and you've heard Mr. Chair Powell, although I don't know what Mr. Greenspan would think of Mr. Powell, but nonetheless, he's been talking about how he would like you to have shittier lives, how he wants to inject pain into your life to try and get control of this inflation problem. And the number one problem, ironically enough, that he and all the central planners have is that the most preferred asset to own right now across the whole damn world is US single family homes. So, you've got like not only all the oligarchs buying up all the real estate in the United States, Bezos and Gates, and I think Zuckerberg has joined their crew. Oprah over there in Hawaii. Hope they burn her at the stake. But also, too, if I understand correctly, like pension funds, the new home sales, when new homes basically come on market, these pension funds just say, fine, we'll take 100 of them. Done. It's just like, how on earth is Joe Sixpack graduating from high school? I mean, forget it. I just don't even think that's even realistic. Graduating from university or something like that, want to start a family. How do they do that in that kind of environment when the oligarchs just come along and just gobble up all the housing? It sure leaves you scratching your head. So, I mean, I think this is the number one problem Mr. Powell has, is this housing market is just relentlessly strong. And the fascinating thing is that this is not based on supply and demand. Well, I mean, I suppose demand from big oligarch type players and big pension funds. Because if you actually look at the econs coming out these days, they're not overly impressive. So today's econs, where am I going with all this? We have the Institute of Supply Management, which used to be the old Purchasing Managers Index. It's fully in contraction mode here, right? 50.0 is the difference between contraction and expansion. And not only is it below 50, but it missed by almost about a 7 or 8% miss there from what the market was expecting. And this is trending down, right? Not up, down. And then ISM Manufacturing Employment Index, same sort of thing. I suppose, how ironic, this is what the Fed wants, is they want us to feel more pain and to be unemployed. But what do you do in the face of these damn oligarchs that just keep bidding up houses and the housing stock? which of course, and you'll probably hear later on today that Mr. Powell is going to talk about how housing inflation is the primary problem here. So it sure leaves you scratching your head, that's for sure. And actually, it's interesting. I mean, the data coming out of like my country is the economy has literally stopped. I don't know whether I can show you that. Maybe I had it on yesterday's data. But Canadian GDP, like US GDP is just roaring. So that doesn't surprise me a hell of a lot. Oh, darn. See, whenever I try and find this stuff, just by the seat of my pants, it never works. Anyway, let's see if I can go to actual websites with actual news. Yeah, let's see what we got here. Interesting. You see, Canadian manufacturing PMI came in under 50, so it's still contracting, but it did tick up. So I suppose that's somewhat of a good thing. Let's see. Where was? There's US GDP. I mean, look at the US gross domestic product. I mean, we're not supposed to be growing at this kind of rate. If anything, this number right here should give the Fed reason to raise interest rates itself. Economy, and I'm sitting there dreaming about Alan Greenspan. Alan Greenspan would have a horse. What do you say? He would have a conniption fit if he saw 4.9 quarterly GDP growth. This is ridiculous. And durable goods orders up 4.7. This is the same thing as when Druckenmiller was barking about retail sales and the numbers that they were letting pass as acceptable. I mean, who the fuck is running this stupid central bank? Because clearly they didn't go to economics school. I think there are a bunch of lawyers that are running the central bank, which, by the way, is a fact. It's terrible. So anyway, the point of the matter is the U.S. economy is just absolutely booming. I was surprised, though, that I saw that the Canadian economy is kind of faltering here, and it's just like stopped, which is exactly what's supposed to happen. So anyway, it is what it is. And interesting too, personal consumption expenditure (PCE) coming in a little hotter than expected. So I'm fully expecting the Fed. I'm actually quite surprised that they're not raising rates anymore. Like considering the housing data, that data, the Case-Shiller housing data, I think came out yesterday, and that kind of surprised me a bit. So anyway, back to sort of today. News: U.S. job openings unexpectedly rise. So there theoretically is, demand for more workers. The economy is still pretty damn strong. But they're saying here private businesses added fewer jobs than anticipated. I guess the sentiment here today is the Fed is going to remain hawkish, but they're not expected to raise interest rates. I think there should be one more interest rate increase here, probably in December. I think that's what the market is expecting. Was interesting to see Japan up a huge chunk overnight. That was one of the assets that we looked at last night. Of course, you probably remember a while ago, I was just overly insanely bullish of Toyota Motor Company. And unfortunately, I missed just an absolute gift of a trade there a little while ago on Toyota. And look at what the darn thing did today. So actually, last night we were contemplating maybe a bullish bot setup since we missed the double bottom. There's my bid, never did get filled. What a doofus. Foggy Boggy's moving up, but now I think, out of Japan, and I think Japan, the central bank is, like if you look at the actual yen itself, Well, it was moving up nicely yesterday, but well, I don't know if it was yesterday or recently. But I did see, yeah, we're still cascading lower. And as long as this chart is the case, like lower highs and lower lows, in fact, you could even make an argument there's a bearish bot here. And the Japanese, they just don't want to raise interest rates. Where have they been instructed by their American masters, Rothschilds, to keep the interest rates there very, very low and keep diluting the purchasing power of the yen. I don't know. But as long as this yen keeps looking like this, then something like Toyota Motor Company is just loving this. Because in essence, they sell their products into the U.S. market and they repatriate the money. And if they repatriate the U.S. dollars at a lower and lower exchange rate, that's more and more yen that they report as profit on their balance sheet. So we were looking at this last night, and it sure looks like this thing's setting up for a really big move to the upside. So there's bot levels. What a surprise right off of that double bottom there. And I suppose you could also make the argument that, as soon as we get sort of market structure signals on the other sides of trend lines, and we got a breakout of the trend line last night. And so we were sitting there going, okay, give us a nice W here. We could probably enter one low, two lows, give us a W, three lows, etc. What do? They just gap it higher, 5% move on Toyota Motor Company overnight. Ay caramba. So just to give you an idea where this thing is projecting it wants to go, if everything sort of stays same, looks like this damn thing wants to go up to about $230 a share, right? Jesus H Christ. So is Brian pretty choked that he missed his fill by like literally $1 down here? Yeah, that would have been a great holding for the registered accounts in my retirement account. Oh, well, what it coulda, shoulda. What I do find interesting, though, is at the same time that this is happening, and wow, what a move higher on Toyota. Alan is just he's just not doing much these days. I think Alan's more interested in trying to convince everybody not to call his newly acquired company Twitter anymore. And it's not working very well. It's funny, even last night we were talking about Twitter this, Twitter that, Twitter this, Twitter that. I still call it Twitter. So how ironic. I also heard that I think it was Facebook was it Facebook? I can't remember. They're actually introducing a subscription service that you can opt out of the advertising model, but you have to pay like $10 a month to use Facebook platform. So I wonder if that's the direction that a lot of these social media platforms are going to go. They're going to actually start mandating that you actually have to pay to use their service. It'll be interesting to see how that plays out. But regardless, talking about Alan and his electric car company, these companies are moving in opposite directions. Fascinating. So, what would have been a fantastic spread trade, I suppose. Mind you, it wouldn't really work too well through here. They both moved up the same. But you can see key reversal on Allen here, and yet Toyota just keeps making higher highs and higher lows. So anyway, interesting disconnect. And Toyota and the Japanese, well, I don't know whether I don't hear too much of the other ones. Toyota really loves to advertise in the US market. So man, I'm seeing Toyota advertising everywhere. So it feels like Toyota is back on the upswing. They used to be the biggest car manufacturer company in the world, and then they had to go through sort of a hangover. I guess it was through this period. Well, I guess you could argue this period here to a certain degree. But I do remember there was quite a long period where Toyota really didn't do much. But anyway, so you can see he's back on the upswing, and woohoo, look out. I also noticed that another stock that I was super interested in recently, Intel, is rocking and rolling, and I'm starting to see Intel advertising again. I haven't seen Intel advertising forever. Anyway, big wide double bottoms, and you can see higher highs and higher lows. Looks like I missed this son of a bitch. I think I had bids working down here, but I was kind of hoping we'd get a dip back to this trend line to sneak my way back in, but look how that darn thing just gapping violently higher here. which is fascinating because this is the exact opposite of the market darling of late. Nvidia, right? Nvidia, that's not going up. That's actually kind of stalling out here. And we were kind of conjecturing last night, is this actually topping out? I've said repeatedly, and keep in mind, they have earnings coming up here middle to the end of November. And I've said repeatedly that if this is a market darling, then usually the market looks the absolute worst when the market darlings look the absolute worst. And then mysteriously, the darn thing just pivots and starts cranking higher. And everybody's like, oh, yeah, capitalism, fine, nothing to worry about here, nothing to see here, business as usual, blah, blah, blah. So, yeah, this would probably be a really interesting one to keep an eye on for sort of a tell of the market going forward. If this can somehow W out, you can see the moving averages have rolled over here. If they can break that model and turn it back up, then it's business as usual. But interesting, this thing's looking very, very heavy here. I'm surprised. And as I said there a moment ago, the opposite, of course, Intel actually looking very strong. I think Chris is trying to tell me that I've been talking to the public a little too much here today. Maybe. We probably want to wind this up pretty soon. Crude up a big chunk. I don't know whether it can hold on to that following the Fed meeting. Gold down a big chunk. Stock markets, kind of wishy-washy. The Dow's basically flat, up 1/8%. NASDAQ up 0.7%. So smush it all together. You got the ES up about 2/3%. It looks like we're making a bit of a shooting star here. And I've been conjecturing recently, is this, a little concerning that we've been rallying into that Fed announcement? Is this one of these buy the rumor? And then we have sell the news on the other side? It kind of feels like it. Now we've got some shooting stars. Obviously, we can't read into any of this until 1 full hour following the Fed announcement. And if you are a fan of this channel, if you do like this fun banter, we do a FOMC meeting where we'll set up a matrix and we'll put Chair Powell and his funny little video down in the corner, and we'll just chit chat our way through that event. That'll be coming up in, I guess, about an hour and a half. So around 11 o'clock my time. We get it going 11:30. I think that's when the press conference starts, and then we have our fun for till 12:30. That was one of the reasons why I gave myself permission to take today off here. Day trading was because we're going to be busy through the whole day here. So obviously we're going to have to see how that goes. I suppose we should probably finish up with a quick look at the corn. Looking at the futures, as I've said repeatedly recently, I believe that we're stuck in a narrow sideways channel for the time being. Interesting how we had a huge shooting star there first thing this morning, right up against the top end of the range, and then just got bitch slapped right back down. Well, that makes sense. Then on the other side of that event, a puke out down into these lows. I'm a bit surprised they didn't take it down to fill in that gap. But you can see, interesting, nobody really wants to sell below value here. Maybe following the Fed, we need to come down and explore, fill in this gap. But I still think we're stuck in our narrow sideways channel. So my impression doesn't really change off of that. But at the same time, too, I think we need to appreciate that this market is awfully nosebleedy. We are up at that 200%, the head and shoulders objective. We are also at 877s off of the original double bottom that was put in basically 1 year ago. And you can see how close we are to 38.2s of the entire range. That's 38.2 off of the whole all-time high range. So looking for some sort of exhaustion up here, I think does make sense. At the same time, too, though, higher highs and higher lows defines a bull. So what that means is to break this bull pattern, we have to go all the way back down to 25,000 and break these lows. And, maybe we carve out some sort of head and shoulders pattern. I'm not going to really look for the bear just yet. If anything, you can see where we have a cluster of moving averages all acting as support. You remember week after week after week, we talked about how the moving averages are acting as resistance. And we also have this trend line off of the bottom that I think is also going to act as support. So the way I'm interpreting this is maybe this is an inside bar. Maybe this was buy the rumor into the Fed. This was the celestial event window, right? The eclipses, everybody, all the humans go crazy. So we went crazy into Bitcoin this cycle, but now that eclipse event is over, coming into the Fed here. And now maybe we need to take a bit of a pause. That wouldn't be outlandish. Now, at the same time, too, because this 38.2 is still floating out here, I could see one more push up top here to clean that up. And I'd also make the argument that if we look at things like the daily charts, what I would like to see to actually carve out a top is I want to see momentum divergences that actually say that, well, it turns out price is actually weaker than what you think it is. And as it stands right now, you can see when I was drawing this earlier, there's our eclipse window. There weren't any divs in this market. So that kind of was like a tell that I don't think the bull's done just yet. We have a V top in MACD. If anything, I'd like to see price push up, break these highs, hit that 38.2 off the higher time frame, but the MACD not go to new highs and the volume not go to new highs. And then we'd have a lot of anecdotal evidence of divergence, and we better be careful. Willie is officially stupidly overbought, so there's no way in hell I can justify investing in this asset right now. And you can see that RSI, it's not in divergence, but it is definitely overbought. So we have the makings for a nice pullback here in price. It's just ironically enough, as I said originally, I think price is just stuck in this narrow sideways channel for the time being. And maybe what we need is one more pop up top, hit that 38.2 up top. I think you saw there on the chart a moment ago, we have this funny little lower time frame bullish setup just working away. It's not really doing anything right now. It's down $17, basically right at the entry level. Maybe this thing pops up here and we get to move stops to scratch and trailing and all that kind of fun stuff. Set up that divergence off the higher time frame chart and then dump. I could see that. That wouldn't surprise me. Yeah, and I think that's probably the extent of my report here today. Still a lot of little altcoins that I just so want to buy. Look at this LTO. Look at the little W right down in there. You cute little W. So, I mean, I want to just keep accumulating this stuff. And, it's name after name after name, just cutest little market structure bottoms all coming in here. Sjord actually is working diligently on that spreadsheet. I think I showed the group earlier. I noticed this darn Dino. I don't know what the heck this story is, but gee whiz, look at that little guy go, eh? So, is it worth paying attention to W's? You tell me. Down, up, down, woohoo! Oh, God, drives you crazy. It's and how ironic. It's just so cliche. I mean, this is it's way too late. Can't touch it now, of course. But maybe on reload zone pullbacks against the bottom end of range, eat that tail down there. Maybe I'll see if I can sneak my way in. And I've got bids actually working through proxies on the site, like this one, for instance. I can't chase that, but if we do get a pullback down into original bottoming area, I will be buying some. But that's the state of crypto right now. I love the idea of, and I've said this repeatedly, using like the next, where are we now? Now it's November and April is the halvening. So November, December, January, February, March, April. Well, we're still at 6 months. So using this next 6-8 months just to slowly accumulate. Oh, look at Sushi go. Son of a bitch. Woohoo! Hey, Eddie, you picked up some more sushi, didn't you? Well, you picked up some for me. Eddie actually did me a favor and grabbed some more of this here. So that's a nice treat. And oh, gee whiz, that looks like another big fat W. Ah! And how ironic, of course, you go out into the public and you talk altcoins and they're like, oh, are you kidding me? Just buy Bitcoin. That's the only thing you should buy. I don't know. I like the smell of money. And I'll tell you, that's the smell of money. All right, everybody. We'll see you for the FOMC meeting. It's not nearly as exciting as this stuff, But what the hell? Always good for a laugh to poke fun at Chip. So we will see you all, I guess, in about an hour and a half, 2 hours. Tune in for the public broadcast of the FOMC meeting today. Other than that, have yourselves a great day. PMA for the win. Slow and steady wins race. Remember what your number one job is. Don't take wood, no wood nickels. Jeez, any other cliches I can throw in here? Oh, bye for now.